So, good evening, friends.
Yes.
And as both the learned speakers before me said, Tirupur is not new to me. I'm not new to Tirupur. Uh, so many years I've come, so many seminars I've addressed, and specifically the budget event was something special. And it is still an interesting memory that each time, you come in the train early morning, very early morning, it stops for a minute at Tirupur, and you get down and you see three smiling faces. I've seen three smiling faces from generations. So for so many years I've come, and at each stage somebody from the branch would have come, would welcome me, and they would take me and put me onto a hotel, and then come and pick me up again for the evening, for the morning meeting with the members, and then evening meeting with the public. So I've never seen. I mean, I'm not a member of the Institute of Chartered Accountants of India. I'm not a chartered accountant, but there is definitely some kind of connect with the poor branch. I cherish it, and it's a nice opportunity to meet again, even though we are not able to personally meet each other. Let me use this virtual meeting to share a couple of my thoughts on the issue with reference to exports and refunds. And some questions have been raised in the WhatsApp groups. I've not. I just saw those questions. Some of those questions might be addressed in the course of a presentation. Not, I will try to take it in the Q&A session. A very critical question. I will take the question, park it, and try to send you an answer by email, which the branch can circulate. So let me, with that background, let me go straight into the presentation.
Screen full sharing பண்ணிக்கலாம் சார். Screening.
Okay.
Yes. Yes.
So let me go straight to the presentation. So before we go deep into exports and the refunds, which are very peculiar to an export industry, which, and Tirupur being an export significant export player, it is relevant. We need to understand a little bit of the impact of cross-border transactions and its impact on cross-border transactions. So I would primarily put the types of transaction as import of goods into India, export of goods from India, import of services, export of services, and in case there is a branch outside India, there is a head office branch transaction. These are five major element of major cross-border transactions. There could be variations out of this, but these are the most critical segments which are covered by the legislation. So from a GST perspective, if you import goods, what happens? See, all of us knew that pre-GST era. I may cover a little bit of basics. Please bear with me because I could be younger members, so I don't want to straight away jump into fourth gear. I will gradually proceed to fourth gear. So imagine a situation where in the pre-GST era, you are importing goods. When you imported goods, you paid the customs duty, you paid the countervailing duty, you paid the SAD. And thanks to the decision of the Supreme Court, a 9-member bench of the Supreme Court, and which was subsequently followed in another judgment, you had entry tax also. Now what happens when you import goods from outside India? In addition to customs duty, you pay IGST. And that IGST also qualifies as a credit. Now, if you're importing services, and when you look at the language which is used as far as Section 7 is concerned, when you import services, whether you use it for your business or not is irrelevant. If you import services for a consideration, that would attract IGST. You import services, if import a service by a taxable person from a related person or any of his other establishments outside in the course of other business also attracts IGST. So you look at it in various perspectives. The goods are dealt with through the customs legislation. The services are dealt with through the IGST legislation. Now, with this in background, straight away I'll go to one issue which Tirupur is facing or India is facing across, all the importers are facing across the country. Little bit of background as to why this became an issue. Let us imagine a situation like this. You are an exporter based in Tirupur. You place a purchase order for a huge equipment, textile machinery, massive plant. You place a purchase order on a German supplier. And you tell the German supplier, you negotiate, and both of you come to a conclusion that the price for this particular equipment from Germany to India be, let us say, $100,000. $100,000 would be the total price. It will be what is called as CFR or CIF. That means It's an all-inclusive price. You have to pay $100,000 to the German party. He will simply load it and you will clear it at your port of destination and you will take it. Now, what are the issues here? I've imported this machinery. The bill of entry will be filed. The bill of entry will show a CAF value of $100,000. The moment I file the bill of entry, I have to pay the custom duty as applicable. I pay the basic custom duty. I pay the IGST. All that is calculated. I pay it, and goods come into your factory. You avail input tax credit on the IG. Now suddenly the government said, "This is okay, but how did the goods come? Sir, the goods came by ship. How did the goods come by ship? That you have to ask the German fellow. He only loaded it to the ship. How did the German fellow load it to the ship? He would have hired a shipping line. Where is the shipping line? Outside India. It must be, let us say, it is in Japan. Japanese own shipping line. So what the government of India said was, there is an agreement between a German shipping line, a Japanese shipping line and a German exporter to bring the goods into India. Therefore, there is a service provided in the form of transportation of goods by vessel by a person outside India, but the destination is India. Now, we don't know where this Japanese fellow is. We don't know where this German fellow is, but we know you. You are here. Therefore, you pay GST. So they made an amendment. They provided for a notification 10/2017, whereby they said services supplied by a person located in a non-taxable territory, Japan, by way of transportation of goods by vessel from a place outside India, Germany, up to a customs station of clearance in India. Then they said, who is the supplier of service? The person located in non-taxable service. Who is the recipient of service? Importer, as defined under the Customs Act, located in the taxable territory. Then one doubt they themselves got. This appears to be a CIF transaction. And then we need to tax this. So why not we put the rate of tax parity? So they said 5% in respect of transport of goods in a vessel, including services provided or agreed to be provided by a person located in a non-taxable territory. To a person located in a non-taxable territory, by way of transportation of goods by vessel from outside India up to customs station of clearance. Then no doubt arose. Now, how do we find out what is the freight value in this transaction? $100,000 is the price. You're not clear as to how much is the freight component. Nobody knows what is the freight component. Nobody knows what is the inspection component. Nobody knows what is the technical certification component. Nobody knows the value of the goods. Nobody knows the breakup. It is one agreed $100,000 price. Therefore, they issued a corrigendum and said that where the value of taxable services provided by this Japanese fellow to the German fellow, I'm using the same example so that it is clearer, is not available, with the person liable for paying integrated tax, the same shall be deemed to be 10% of CIF. The Indian importer has no clue as to what is the transaction between the German supplier and the Japanese shipping line. The Indian importer does not know anything about the freight transaction, does not know what is the quantum of the freight, what is the amount of freight negotiated. Therefore, the lawmaker decided that through the notification corrigendum, yes, it is possible that you may not know, doesn't matter. You still pay by adopting 10% of the CIF value. So, what is the effect of this? IGST on ocean freight on CIF, in effect, is a levy on a transaction between two non-residents who are located outside India. It is on a service contract executed outside India. It is on a consideration that passes outside India. And on an importer who is not privy to the freight contract between the persons located on. As an Indian importer, I have no idea as to how the Japanese company and the German company have negotiated what would be the cost for moving the goods from Germany to India. What is the shipping cost? What is the transportation cost? They would have negotiated, they would have had long-term contracts, they would have had rate contracts, they would have had bulk yearly contracts, they would have had ship-wise contract, they would have had consignment-wise contract. I don't know. I'm not supposed to know also. Even if then what is the price of negotiating an all-inclusive price? Therefore, we decided to question this in a court. So we filed a set of writ petitions. These similar provisions existed even in service tax law. So we challenged the service tax law notification as well as the GST law before the Madras High Court. Our challenge was primarily on the ground that you are imposing GST under reverse charge mechanism. For you to impose GST under reverse charge mechanism, I must be a recipient of service. Am I a recipient of service in this transaction? The answer is no. Second, the transaction between Japan and Germany, how does India get jurisdiction for this kind of a transaction? So on these grounds, we filed a writ petition before the Madras High Court. So let me put it from a legal perspective. Is the importer the recipient of service? I will raise the question and give you the answers. Section 5.3 of the IGST Act is the enabling provision. It says that IGST paid by the recipient of notified goods. Now, who's the recipient of service? The recipient of service is that supplier located in Germany or USA. I'm not the recipient of service. I'm the recipient of the goods which I import. I'm not the recipient of the service which is transportation. The recipient of the service which is transportation is the foreign supplier. The provider of the service is the foreign shipping. Therefore, when a foreign supplier located in USA or Germany engages a service provider located in Japan, the recipient of service is only the foreign supplier. Second question, is the transaction an import of service? Now there is a definition under the IGST. Import of service requires three conditions to be satisfied. Number one, the supplier of service is located outside. Yes, supplier is located outside. Recipient of service is located in India. Now how do you say that? Recipient of service is clearly not in India. We also have a definition of recipient in the CGST Act, which says recipient means the person who pays the consideration. Now, who pays the consideration for the transportation? It is a German party or the US party. Therefore, the recipient of service is not located. And therefore, if the import of service, three conditions, even one is not met, it ceases to be an import of service. It is not an import of service. Therefore, you cannot apply RCM, you cannot apply reverse charge mechanism on this transaction. Now, what are the decisions for this? One of the biggest, most important critical decisions which we rely on in the context of challenging this particularly is that you must be able to maintain a connection to India for a levy to be valid. There must be a nexus to Indian territory or Indian operations for it to justify the levy. Without a nexus to an Indian activity or an Indian operation or the territory of India, you cannot simply say two non-residents are getting into a transaction, I want to tax it. Of course, 195 of the Income Tax Act was amended. The foundation said no, and therefore 195 was specifically amended to cover that particular requirement of a TDS. But here there is no such mechanism to provide. When two non-resident companies are transacting with each other, there is no rational collection between the tax and the person on whom it is imposed. Tax can be imposed only on the recipient of service, even as held by the Supreme Court in Gujarat. And in this case, the Indian importer is not the recipient of service. Then the Supreme Court constitutional bench in the case of GVK Industries very clearly said that Parliament is constitutionally restricted from enacting legislation with respect to extraterritorial aspects or causes that do not have or nor expected to have any direct, indirect, tangible, or intangible impacts or effects in the territory of India or the interest or welfare being or security of the inhabitants of India. So GVK as well as Ambuja Cements are directly on the. And you also have the Vodafone in the context of Section 195, which also supports this proposition. Then, from another perspective, the second argument which we put forth before the Madras High Court was, and of course, we talked about the fact that there is no power to levy tax. Section does not give the power. Importer is not the recipient. Nexus is not there to the country. Apart from that, said that what happens when you import goods? Customs law takes over. Under customs law, Section 14 is the provision which deals with valuation. And in terms of valuation, as well as which is based on the W2 valuation rules, the CAT valuation rules is what is our valuation rules, customs valuation rules. Freight forms part of the value of goods. So freight forms part of the value of goods for the purpose of customs duty. How can you cull it out and separately say that it's a service provider? Third argument, on the very same freight which forms part of the value of goods, I have already paid IGST on the goods. Because please remember, when I import goods, I have to pay customs duty as well as IGST on import of goods. When I pay IGST on import of goods, I have to pay it on the customs valuation. And customs valuation includes the freight. Therefore, I have already discharged the IGST on the goods element, and which includes the freight value. How can you again say I have to pay IGST on the service cost? These were the arguments that were raised, and writs are still pending as far as before the Madras High Court is concerned. But in the meanwhile, similar writs were filed across the country, and writs were filed in the Gujarat High Court. And very recently, 2020, Gujarat High Court has struck down the notification as unconstitutional. Gujarat High Court has very clearly held that importer did not avail transportation service. Importer is not liable to pay for the transportation, and therefore importer is not a recipient of service directly or indirectly. So, as our main argument raised in the Madras High Court, that has been accepted by the Gujarat. Entire transaction took place outside India, and the notification seeking to tax the importer on such a transaction is unconstitutional. This is another ground which we have raised before the Madras High Court and cleared by the accepted by the Gujarat. Freight forms part of the value on which customs duty as well as IGST on import is discharged. It cannot once again be levied on the misconsumption. A separate tax could be levied on the freight form. Same argument is raised before the Madras. In the absence, this is another interesting observation of the Gujarat High Court. They said, in the absence of an express provision, a delegated authority cannot impose a tax because the levy comes through a notification. The levy comes through a notification, and therefore the Gujarat High Court said that where is your express provision to impose this kind of a tax? So Gujarat High Court in totality has analyzed all aspects and has accepted the legal proposition that any attempt to levy IGST or for the matter service tax on ocean freight is prima facie illegal and unconstitutional. As far as the Madras High Court is concerned, the batch is pending and they would take up for hearing as soon as possible. Now, of course, the virtual hearing is going in full swing. The batch matters can be taken up even for final disposal with the Honorable. So now comes the practical thing. I have clients who keep on asking, sir, why should I fight? I have no reason to fight. I am paying IGST on ocean freight separately at 5%. I calculate and pay. I'm anyway getting the credit. What is the problem? Yes, you're anyway getting the credit. You have no problem technically. But then, are you able to get the refund? Are you able to encash the entire amount as refund through exports? If the answer is no, then it's a cash flow issue. Second, post COVID, anybody who's going to pay reverse charge GST has to first find cash to pay this. Cash flow is a big issue post GST. So you have to upfront pay this money and then take the input tax credit as far as our RCM is concerned. Therefore, a lot of companies are now rethinking, and the number of dockets are also increasing as far as Madras High Court is concerned because people now want to challenge it. Earlier, some of them were hesitant to challenge because anyway they're getting input tax credit. What is the problem? Now, I have a third worry. What happens if you have taken the credit and levy is struck down as unconstitutional? What would follow? Those are bigger legal debates. I'll skip it for the moment. Having addressed this issue on, okay, let me complete because there was some WhatsApp question now with reference to import of services. So I'll just slightly digress and take a situation which could be relevant for a Tirupur export. Typically, what happens? You have agents appointed outside, and these agents are supposed to hunt around and find markets for you. So there is an agent located in GCC territory. There is an agent located in Europe. There is an agent located in North America. And the objective of these agents is to get orders for you. And based on the orders, you export. Now, this intermediary, I use the word intermediary, this person who's calling himself as an agent is bringing the foreign supplier and the foreign buyer and the Indian exporter together. And for this purpose, he is paid some commission. So there is a foreign exchange outflow. There is a payment. Now, import of service will attract GST. Provided place of supply is in India. Now, once you say it is intermediary, the provisions of Section 13 of the IGST Act suggests that intermediary means place of supply is outside India, location of the intermediary. Therefore, since the agent is located in Germany or in Washington or in Dubai, straight away the commission paid by way of foreign exchange would not attract import of services. And there is no question of GST on the foreign. But what happens if I receive commission? Now you get into a problem. The intermediary, if he is located in India, the place of supply becomes India. If place of supply becomes India, it is not an export of service. I'll come to that a bit later. So if it is not an export of service, I am having a problem and I may have to pay tax on the particular transfer. So whether it can be taxed or not, I'll address it in the next set of slides. So let me go to exports. Export of goods is zero rated. Export of service is zero rated. Section 2.5 of the IGS Act defines export of goods with its grammatical variations and cognitive expressions to mean taking goods out of India to a place outside India. This is similar to the Customs Act definition. Now, mind you, nowhere in Section 2.5 there is any provision, there is any condition which says you must receive in convertible foreign exchange. Nowhere in 2.5 it says that you must realize the export process. It says taking goods out of India to a place outside India. You'll understand the impact of what I'm saying when I come to some of the rules later. Let's look at the export of service definition. 2.6 of the IGST Act defines export of service. Supplier of services in India, recipient of services outside India, place of supply of services outside India, payment for such service has been received by the supplier of service in convertible foreign exchange. So look at this definition. The receipt in convertible foreign exchange becomes a condition for export of service. Under service tax law, the provisions were very different. Under service tax law, the place of provision of service must be outside India for it to be an export. That's all. There was no requirement for receipt in foreign exchange as a condition for it to be treated as an export of service. Rule 6A did not say that of the service tax rules. Whereas, definition of export of service in terms of Section 2.6 indicates that I must receive the sale proceeds in convertible foreign exchange. Of course, branch and establishment, I'll skip that for the moment. It's not a very major point as far as the report is concerned. Now, this is part of the statute where one of the conditions for export of services is receipt. Let me give you two examples before I go further. One is the case of a chartered accountant based in Tripura. You're a chartered accountant. You have a client in Dubai. You're providing some advisory services to the client. Every time, most of the professionals have the same doubt. The doubt is very simple. Sir, I am sitting in Tripura. I'm not going to Dubai. Cannot go to Dubai also because of COVID. And I'm not even part of IPL team. Even if my IPL team, I'll be quarantined. So I don't go to UAE. I'm sitting here and giving my advisory. From my office, one email goes, opinion goes, and I bill the foreign client. Is it export of service? Now you're a chartered accountant. You're located in India. Your recipient is a client. He is located in Dubai. What is the nature of service? Advisory service. This advisory service does not fall under any other category. Therefore, default category under 13.2 would apply. If 13.2 would apply, then the place of supply is the location of the recipient of service. Location of recipient of service is the Dubai client. Therefore, place of supply of services. Payment for such service has been received by the supplier in convertible foreign exchange. That's all. To meet these four conditions, an export of service. Once there is an export of service, it becomes zero rate. Situation 2. I am an agent in Tirupur. My objective is to bring the foreign party and the Indian exporter together. For this, I get a commission from the. I bring valuable dollars to this country. So you may meet the fourth condition. Yes, I am receiving in foreign exchange. Supplier of service located in India. Yes, you are located in Tirupur. Recipient of service located outside India. Yes, client is outside India. Who gives you money is the client. Place of supply services outside India. Unfortunately, no, because intermediary 13 subsection 8 provides that the place of service would be the location of the intermediary. Therefore, you're stuck by the fact that one of the conditions are not met. Therefore, even though you receive the money in dollars, this transaction is liable to GST. And this is the position as far as service tax is concerned from 1st October 2014. It was recently challenged before the Gujarat High Court by arguing that it is not a correct provision. You cannot argue that a provision is not correct based on circulars. Unfortunately, this was argued saying there are so many circulars by which it should not have been taxed. You have to establish a legal proposition to say why you should not be taxed. We try to give you that proposition and see whether we can make out a case at least elsewhere in some other part of India. Let me go to section 16. Section 16 says that in 3, a person making a zero rated supply shall be eligible to claim. Please understand, Section 16.3 does not impose tax. Section 16.3 says a person making zero rated supply shall be eligible to claim what he may supply the goods or service or both under bond or LUT without payment of IGST and claim refund of unutilized items. So what are they saying? You export goods, you export garments, you export ready-made garments, you export hosiery, you export services, you export consultancy, do whatever you want. You can export without paying IGST, subject to one condition, safeguards, etc. So they say letter of undertaking. Give a letter of undertaking and export. We'll come to what the letter of undertaking a bit later. Second option, they say, you don't want to do that, and bind you. Why do you do that? You export it and then say, if these are, I've used so many services for my exports, I've used so many raw materials for my export, and therefore I need a refund of whatever GST I've paid. Refund of the unutilized item. Second option, no, I will pay the IGST on my export. So I will export the goods, calculate the value, calculate the transaction value, pay the IGST applicable for those goods, and whatever IGST which I paid on exports, I come back to the government, knock their doors, and seek refund of the IGST paid. Both the categories fall under Section 54 of the CGST. So in the first route, I don't pay IGST on my output. I seek refund of my ITC. In the second route, I pay IGST on the output and seek refund of the IGST paid on the output. Now, where do they get these ideas? Many of you are very serious in the profession. Let's go back in time. Go back to pre-GST. Take Central Sales Tax Act. Under the Central Sales Tax Act, if you export goods, it will fall under Section 5(1) of the CST Act, and therefore there is no tax. Even if you buy the goods and export it, there was no tax on that seller because Formats transaction will take care of it. Formats will protect it. 5(3) of the CST Act. So when you export goods, there was no tax. In fact, the Constitution was specifically the article the Article 286 is very specifically provided for this. Article 269 very specifically provided for this. The CST Act itself, preamble itself says that a tax on a legislation to define what is an interstate sale of goods as well as an export transaction. In the pre-GST law, there was no concept of a sales tax on exporting. And where was the tax? Excise duty had Rule 18 and Rule 19. Please understand, excise duty was a duty on manufacture. Therefore, your factory would be located in the interior part of Tirupur. When the goods leave the factory gate, excise duty was payable. Because excise law was like that. Excise duty on manufacture payable on removal. Therefore, the goods will have to leave the Tirupur factory gate, come to Coimbatore. From Coimbatore, it may get exported directly, or from Tirupur, it may come all the way up to Chennai, go to a CFS, and from the Chennai CFS, it may get exported. Therefore, there was clearly a time lag between the removal from the factory and the actual shipment. Excise law said, have you removed? Yes. You have to pay duty. So the liability arose. And that is why Rule 18 and Rule 19 of Central Excise Rule said, in Rule 18, you pay the duty, take back the duty as a refund. We call it rebate. In Rule 19, give a letter of undertaking, don't pay the duty, claim refund of your SENVAT. This Rule 18 and Rule 19 is only borrowed into Section 16.3. Forgetting the fact that the CST Act never contemplated levy of tax on exports. Excise duty was not really a levy on exports, but was a levy on removal, and therefore the technical problem of goods getting removed had to be addressed by giving back the money when the goods are actually exported. Service tax, there was no service tax on exports. Therefore, without understanding why these provisions existed, unfortunately, they simply borrowed Rule 18 and Rule 19 into Section 16.3, whereby creating a situation that in GST law, 16.3 says you export the goods without payment of IGST or you export on payment of IGST. So my question from a pure lawyer's perspective is section 16(3)(b). Now, why would you ask this question? You would ask this question when you are required to pay IGST on an export transaction because you have not given LUT, or you're required, they're calling you to pay IGST because you have not received the convertible foreign exchange, or you've done export transaction, you have not reported the transaction the way it has to be reported, and IGST demand is getting created. In all those cases, you can explore one more constitutional possibility. You can only knock the doors of the court. There is no assured result, but there is a possibility that you can raise a question. Section 16(3)(b) value. Assuming a person has exported goods or services and has not executed the bond, or has not given LUT, or he has not received the foreign exchange, can you impose IGST on him? My answer to it, how will you impose? Section 16(3) is not a charging section. It only says options for claiming refund. I just now read out the provision. So where is the charging section? 5(1) is the charging section. 5(1) says tax on interstate supply. Now, the levy under section 5(1) or the statute, namely the IGST Act, has to be traced back to the Constitution. So you run back to the Constitution. Where does the power come? If you look at Article 269A, which has come because of the 101st Constitutional Amendment, says only supply in the course of import as a deemed interstate supply. In other words, the Constitution has said that the Parliament can make a law for interstate supply, and it also deems a supply in the course of import as an interstate supply. It has not deemed an export to be an interstate supply. If an export is not an interstate supply and there is no constitutional mandate or sanction to consider export as an interstate supply, Section 16 cannot come into play and then say you have exported, you have not paid IGST, please pay IGST. Therefore, it can be questioned on the simple ground: where is the power to tax an export transaction? Now, let me come into the semantics, the rule part of it. You are supposed to execute a bond or letter of undertaking in form GST RFT 11 before your jurisdictional commissioner, binding yourself. You have to bind yourself to pay the tax along with interest specified under section 51. When you're binding yourself to pay the tax along with interest in a period of 15 days after the expiry of 3 months or such further period as may be allowed by the commissioner from the date of issue of invoice for export, if the goods are not exported out of it. This is very, very important. When I clear the goods for the purpose of export from my factory in Tirupati, the logical expectation is that the goods must go to the port and ultimately leave the country. All this should happen at least within 3 months from the date of issue of invoice, or get some extension from commissioner. Within that period, the goods must leave the country. Now, this is very important. This might have an impact on account of COVID. Might have cleared the goods get stuck somewhere because they're not exported, because port is not functional, or ship has not come. There could be all kinds of issues. You'll have to check and ensure within time or get the necessary extensions or apply the ordinance and the Supreme Court judgment to see whether this period can be automatically extended. Now, what happens if you don't do this? Then this bond says, if on the expiry of 3 months or such other further period of 3 months, if the goods are not exported, then within 15 days from that expiry date, you have agreed to pay the tax due along with interest. You may execute a bond, but Article 265 says that cannot levy tax or collect tax except with the authority of law. Where is the authority of law to collect IGST on an export transaction? If there is no law or no provision which can be brought into play to levy a tax on an export transaction, mere execution of an LUT cannot bind the cannot mean that you have agreed, you have conceded that you're going to pay the tax. The power to levy is very, very important. If the power to levy does not exist, authority to levy does not exist. If the authority to levy does not exist, Article 265 clearly operates as a bar. Now, coming to the second situation, I've executed a bond or I've executed an LUT. In that, I bind myself to pay the tax within 15 days after the expiry of 1 year or such other further period as to be allowed by the commissioner from the date of issue of invoice for export if the payment of such services is not received by the exporter in convertible form. Please understand, for goods, I have to show that the goods have left the country. For services, I have to prove that the payment for such services is received in convertible foreign exchange within the time prescribed by RBI. So that gives some window because RBI has extended the time. But I must get the proceeds within the time prescribed under FEMA. Now, again, if I'm not able to realize the proceeds within the time prescribed by RBI or within the extended time given by the RBI, can there be a GST levy on me on the ground that I've executed upon? So that is where I ask the question, where is the authority to levy IGST on? So what is the justification for my proposition? Where the goods are not exported in time specified, the law, this is what 96A says. If you export the good, if you don't export the goods within time specified, or you don't receive the money within the time specified, the export which was allowed under LUT shall be withdrawn forthwith, and the amount shall be recovered under Section 79. Can you say this? You are not allowing the export. Export is not something which is permitted and done. Export restrictions or prohibitions or restrictions can come only through foreign trade policy and not through GST law. GST law only gives a mechanism for refund. GST law does not say that unless you execute the bond, you cannot export. Unless you execute the LUT, you cannot export. If you have violated the bond, you cannot export. But it will be deemed as if you have not exported. How does it become taxable? How does it become an interstate supply for it to be taxed? How can Section 79 apply? Section 16 covers only refund obligations. Can there be a levy of GST on a zero rated supply? That is a primary question. Because please understand, there are taxable supplies, there are zero rated supplies, and there are exempt supplies, three categories of supplies. If we look at the input tax credit, you also look at the input tax credit provisions of Section 16 as well as Section 17. It will say that, for example, let us look at a situation where a person has got taxable supplies and exempt supplies and common ITC. The provision would say ITC when you're having for taxable supplies, including zero rated supplies and exempt supplies, proportionate GST credit. So, zero rated supply is a separate species by itself. Taxable supplies is one species by itself. Zero rated supply is one more species. And exempt supply is another species. So you don't have a mechanism for levying a tax on a zero rated supply. And how can you then say that you have not exported within the time frame, you have not received the money within the time frame, therefore we can impose a GST on. Section 79 requires the amount payable by a person to the government under the Act or rules. So again, I said there is no charging provision for export, and even for import of goods, the levy is only under the Customs Tariff Act. There is no mechanism to tax and export transfer. So if there is a situation where your client is an exporter, has exported the goods and has exported services and has not received the foreign exchange, or is an exporter, but for some reason he has omitted to give the LUT, he has not given the bond, or is an exporter, he has not renewed the LUT in time, or is an exporter and for some reason the goods are stuck somewhere, goods are not left the country. In all those cases, if there is an attempt to levy IGST on the transaction, you have a legal remedy in terms of questioning the levy for the various reasons which I gave in this last two slides. Coming to Rule 96. Rule 96 deals with refund of IGST paid on goods or services exported out of India. We are looking at a healthy situation now. You are a good exporter, you have exported, goods have left the country, you have properly given bond, you have properly given LUT, everything is done, goods have left. Now we want refund. Whole purpose of section 16 is that you want refund of the tax you have paid. Please understand, rule 96 is the tax which you already have paid on the exports. Kashtappattu you find money to pay the IGST on exports and then knock the doors of the revenue authority and say, please give me a refund. What is the procedure? All of you are experts practicing chartered accounts. You know the procedure. I can't be teaching this to you because you will teach me. You will know much more practical issues in terms of the procedure than what I would talk. But what the law says, I would try to project and see what we can look at. Shipping bill is deemed to be the application. Fine. Application deemed to have been filed only when the person in charge of conveyance carrying of the export goods files a departure manifest or export report covering the number and date of shipping bill or bills of exports. They are requiring that your application shall be deemed to be filed only when the document filed by the person in charge of conveyance specifically covers the number and date of shipping bills and bill of export. And GSTR 3 and GSTR 3B has been filed. GSTR 3 or GSTR 3. Or the, because GSTR 3 doesn't exist, therefore wherever it's possible they put GSTR 3B as or. I have not filed GSTR 3B. Why I have not filed? Last month's cash flow problem. I have to pay the tax for some domestic transaction. I could not file. Previous month also I could not file. My EVA bill is blocked. I'm not able to upload this month's return unless I upload the earlier 2 months return. This is very peculiar problem. You have to clear off all the months through which of arrears you have not filed the returns. Then you can file the actual month where you want some relief. And for you to file those months returns, you have to pay the tax with interest where applicable. Unfortunately, I've been trying my level best to convince the authorities and the government. We should de-link GSTR 3B and tax payment. Tax payment can be independent. GSTR 3B can be independent. In a service tax, you had a service tax return which was filed separately. You had a due date for payment of service tax. Excise duty was paid on a particular date, return was filed on a particular date. Therefore, this linking the return to the payment makes it very, very complicated for a lot of businesses. And 1 month of default, it suddenly becomes 2 months of default, 2 months becomes 3 months of default, and you cannot rectify it in mass. Application deemed to be filed only when the person in charge puts the number properly. He messes up the number, officer will say no refund. Match all refunds are stuck for these technical reasons. So how much of care you take, one number will go this side, one number will go that side, date will go this side, because you do too many transactions. Details of relevant export invoices in respect of export of goods contained in GSTR 1 shall be transmitted electronically by the common portal designated to the system designated by the customs. So the GST portal, customs system, and then they will give a confirmation that the goods have been exported. On receipt of information regarding furnishing of valid GSTR 3 or 3B in the common portal, the officer shall proceed to process the claim of refund, and the amount equal to IGST paid in respect of each shipping bill or bill of export shall be electronically credited to the bank account. So GSTR 3B becomes very, very, very critical. Refund shall be withheld where there is a request from the Judicial Commissioner to withhold the payment of refund, or the customs officer determines that the goods were exported in violation of customs. I'm on appeal on some of these matters. The refund has been withheld for on the ground that there is a direction given by the Judicial Commissioner, or the officer of customs determines that classification was wrong and therefore it is now constituted a violation of customs. In both cases, we are on appeal. Now let me go to the legal issues in GST refunds. Sami Varam, Pusari Varam. You're very familiar with it. Sami Varam Uttalum, Pusari Varam Uttalum, Rumba Parangal saying. So 16 says take refund. Export, pay the GST, take refund. 16 says export, give a LUT, ask for refund of your unutilized input tax credit. So section 16.3 is the Sami. 89.4 is the Pusari. What does 89.4 says? will give you refund based on a formula. That formula, definition of net ITC, does not include ITC on capital goods. See, if I'm a big exporter, if I'm a huge garment exporter, or if I'm a major hosiery or ready-made garment exporter, today's process is such that I need to use the latest technology. I must have a fantastic plant, must have the best of equipment. So I import a lot of equipments on which I pay significant GST on. Now these capital goods are as much critical as the raw material which I buy for making the t-shirt. If I buy some buttons for making the t-shirt, the machinery that is used to stitch is equally an important element in the emergence of the garment. Therefore, capital goods also plays an important role. That is why under input tax credit, inputs you get credit, input service you get credit, capital goods you get credit. But the definition of net ITC does not include ITC on capital goods. It's the first legal issue. Second legal issue. Amendment was made to Rule 89(4) with effect from 2020, 23rd March 2020. Corona காலத்தில் தான் the amendment வந்தது. What is surprising is we were close to lockdown by third week of March. Rumors were going around. One Sunday had also happened. Corona was a pandemic, was well known. At that time, business was in tremendous peril. People were hoping for relief, some form. But what came on 23rd of March 2020 was a shock. Suddenly, zero-rated supply definition itself was cut. Turnover of zero-rated supply of goods means the value of zero-rated supply of goods made during the relevant period without payment of tax under bond or LUT, or the value which is 1 times the value of like goods domestically supplied by the same or similarly placed supplier as declared by the supplier, whichever is less. So, you export for $100 a particular tax period. Let us say April 2020, you have exported for $100. Now, normally your zero-rated supply is $100. So, you will calculate your formula for refund net ITC into zero-rated supply divided by total turnover. Assuming $100, 100 there is no domestic sales. 100 by 100, therefore you will get a full ITC refund. Now, if what they say is that 100 figure, you won't take as 100. 100 or 1 times the value of like goods domestically supplied by you or your friend. Not discretion. Like goods, again, difficult to calculate. Declared by the same supplier or some other supplier in respect to his refund is claimed. 1 times the value. So let us say you do a domestic transaction of $10. I'm just putting $10 for calculation. If you do domestic of 10, then your zero-rated supply is no longer 100. It is deemed to be 1.5 of 10. Therefore, it is 15. You export for 100. Realize $100 foreign exchange. But the export value is now kept and pegged at a lower figure. If the export value is kept at a lower figure, the refund will come down. ITC will come down. And calculating this is also complex. 1.5 times the like goods. What is the objective behind this? Why are they denying refunds which are so crucial to an exporter? Of course, they will say, sir, we are not doing anything. You won't get refund. You will have GST credit. I need cash flow for my next transaction. Instead of providing provisions which are benefiting exporters, we are actually providing for provisions which affect. I'll talk about this a little more later. So, amendment restricts the quantum of refund, and there is no clarity whatsoever as to what is the value of like goods and similarly placed supply. Obviously, we'll get into all spinning litigation in terms of what is like goods and what is similarly placed supply. So I'll address both these issues. First issue, the formula does not cover capital goods. And as I said, as an exporter, your machinery is very, very critical. Let's look at the legal arguments. Input tax is defined in section 262 and covers the tax on goods or service or both. Input tax definition does not make a distinction between capital goods or non-capital goods. It simply says tax on goods or service or both. There is no distinction between inputs and capital goods in this definition of input tax. Section 263 defines input tax credit, and section 54 refers to refund of unutilized input tax credit. And 54 says you can put conditions, safeguards, etc. In the form of conditions and safeguards, can you put a formula which goes against 54.3 itself? 54.3 says you are entitled to refund of unutilized input tax credit. Input tax credit means the GST which you pay on goods or services or both. Therefore, unutilized input tax credit is the money available in your books and in your returns as unutilized input tax credit. It does not have an identity as to what is inputs, capital goods, and input services. The entire amount is available as ITC. 54 says you are a refund, you are an exporter. Take refund of unutilized credit. Only procedure can be specified by the rule-making authority. In the guise of safeguards, can you put a condition which violates 54? My simple submission here is rules cannot go beyond the act. We already have a decision of the Supreme Court in the case of Intercontinental, which all of you are familiar in the context of service tax, when Rule 5 of the valuation rules contemplated that the expenditure will be included in the reimbursements will form part of the value for the purpose of service tax. Supreme Court struck down the rule. Delhi High Court struck down the rule, and Supreme Court approved the Delhi High Court judgment and said that the provisions are unconstitutional. The rule cannot go against the section. Babaji Kondaji case, again, same principle. Rule cannot go beyond statute. Ispat Industries, again, Supreme Court in the context of customs. They talked about how customs valuation rules cannot go beyond section 14. So there are enough precedents to argue that rules cannot go beyond the section. We have filed writs before the Madras High Court, specifically asking for relief in terms of capital goods. We also filed writs in other courts in the very same thing, saying that an exporter should get refund of even the GST paid on capital. Matters are pending. As I said, the formula for refund of input service, refund formula, does not cover input service and capital. Definition of net ITC does not include ITC of input service and capital. Now, in the context of inverted duty structure, the same question came up before the Gujarat High Court. Gujarat High Court said, once you recognize that your claim pertains to unutilized credit, any rule which goes beyond section 54.3 is not valid. And therefore, the recent judgment in the case of VKC Footsteps, Gujarat High Court held that you have to read down Rule 89.5 to the extent it restricts the refund of input service. So the same issue is now pending before the Madras High Court. And obviously, of course, arguments have already going on full flow as far as this point is concerned. It's already being uttered, where the VKC decision is at play. Coming to the latest amendment of 23rd March 2020. Can there be a deemed value of zero rated supply? Let's look at the entire GST law. Transaction value, price paid or payable, supply. Let's look at the charging section. Levy of GST on a value determined under section 15. Value means transaction value. So when the law very clearly talks about price paid or payable being the transaction value, there is no question of a deemed value for zero rated supply. So any rule which says that you will ignore $100 and find out an artificial lower value as zero rated supply it has to go to court. It has to be challenged. When the formula ensures that only credit attributable to export qualifies for refund, what is the justification for even reducing that export value to a deemed value? Can a formula ignore the actual zero-rated supply and substitute 1 times the value of like goods domestically supplied? If ITC refund portion is reduced, the credit would remain in the books without any window for encashment, since domestic sale will not be significant. In my view, the formula of turnover of zero-rated supply only hinders and does not help export. Formula defeats the mandate in section 16.3 and 54.3. Therefore, Rule 89.4C amendment is ultra virus, section 16.3 and 54.3 would be the legal submission that would put forth to the audience. Of course, it can be done only by a court. Court has to declare it. Therefore, the only possibility here is to file a writ petition challenging this particular. Now coming to Rule 96. As if 89.4C was not bad enough, again during COVID time, one more amendment came. One more amendment in the form of a new rule. Rule 96B says that you are an exporter of goods. What are you required to do? You have to show that the goods have left the country. And that confirmation will come from the customs. So you are supposed to clear the goods from your factory, take it to Chennai port, export it, you have exported it. Therefore, your bond says, your LUT says, sir, I have exported within the time frame, matter over. Now, Rule 96B says, because your export was fine, we might have given you refund. But you are not received the money for the sale of goods that are exported. Your export proceeds have not come. Please understand, receipt of convertible foreign exchange is a condition for export of services. It is not a condition for export of goods. I repeat that point. Receipt of convertible foreign exchange is a condition only for export of services and is not a condition for export of goods. The only condition for export of goods is that goods must be taken out of India to a place outside India. So what is not there in the act, what is not there in the definition, is indirectly and artificially brought through Rule 96B, which says that after you export, after the goods leave the country, after you give back your refund to you, if you don't realize that proceed, 96B says action will be taken to recover the refund like an erroneous refund. So if you don't realize your proceeds within the time limit prescribed under FEMA, you must pay the amount refunded along with interest bearing within 30 days from the extended period. If you don't pay, show cause will come. Unless RBI writes it off. After recovery, if you are managing to say, sir, I have received money, then they will give back. Fundamentally, 96B tries to rewrite what is there in the CGST Act and the IGST Act, which is not permissible. Section 54 is quite clear. Definition of export of goods under Section 25 is quite clear. Section 16.3 is quite clear. Unless the Act is amended to say that built in the condition of receipts of convertible foreign exchange, you cannot do through a backdoor rule and say that you must also receive foreign exchange for goods. This is all the more important, which I'll talk about reasons later. This is the one I'm talking about. Is Rule 96B valid? Export of goods has been defined to mean taking goods out of India to a place outside India. This definition is different from the definition of export service. Rule 96B is therefore violative of Section 2(5) of the IGST Act and Section 16B of the IGST Act. It is all the more important than during COVID situation. Why? COVID situation, பணம் வருமா வராதா தெரியாது. ஒரு பக்கம் ஆர்டர் வர மாட்டேங்குது. On one side, your orders are coming down. On one side, you are not too sure. The future is quite uncertain. You are slowly limping back to normal. The mask business took care for some time. PPE business took care for some time. But I know the real struggle which exporters face. not only are you in trouble, some of your biggest buyers are in trouble. What was known as very big brand names, suddenly you see news items saying that they have gone for Chapter 11 bankruptcy. Or a foreign buyer writes a letter saying that you might have dispatched it, but I will not take delivery. I don't have money. I'm on the verge of closure. So the impact is on the world economy. There is a bankruptcy of the foreign buyer. There is a distinct possibility that you will not realize the foreign exchange. You have to write off. Such a scenario, you are supposed to give the refund back to the government. 96. When the section does not talk about it, when the section only talked about export as an event, when go back to my earlier slide, when the power to tax export itself is questionable. In earlier slides, I explained as to how there is no power to levy tax on export. These are all indirect methods to tax exports. So all of them are questionable. Rule 96 also is in my view, my humble submission, is violative of Section 2.5 and Section 16.3 of the IGST. Circular number 125. It was a partial relief by saying that within tax periods you can mix. See, fundamentally, with due respect, some amount of business knowledge is required when you draft a procedural mechanism. When you define a tax period as a month, the problem starts. You define tax period as a month, July month. I will have exports in July in respect of goods manufactured in May. I may not have procured that much inputs or input services in the month of July for having ITC in that month. Every tax period, it is not as if you buy takali in the morning, you buy kothmali in the morning, you make some rasam, and rasam is ready in another half an hour. இன்னைக்கு raw material வாங்கி இன்னைக்கு you don't manufacture, இன்னைக்கு you don't export. You may be capable, but that is not what would happen. It's a cycle. It's a law. It's a going concern. That's why it's called a going concern concept. So this assumption that everything must happen in the tax period, export must happen in the tax period, ITC or the appropriate export must happen in the tax period, we give you refund. So that was the flaw, fundamental flaw. Even now, officers keep rejecting this, saying that in just 2 months you have not exported, but you have claimed refund. ஐயோ அது பழைய ஐடிசி சார் கொடுத்துருங்க சார். அந்த மாசம் நீங்க கிளைம் பண்ணணும். அந்த மாசம் எனக்கு எக்ஸ்போர்ட் இல்ல சார், இந்த மாசம் தான் ஐ ஹேவ் எக்ஸ்போர்ட். அதெல்லாம் எனக்கு தெரியாது. இந்த மாசம் எக்ஸ்போர்ட் பண்ணீங்கன்னா இந்த மாசம் ஐடிசி தானே அப்புறம் வரைக்கும். இந்த மாதிரி every how much of litigation can you go on for all these things? இது போற things. Therefore, board gave some kind of relief saying that tax periods can be mixed, even though it is still not being fully implemented. But then board said, no, you cannot switch financial years. I will have to switch financial years if it comes to March. My last quarter exports may not be great, but input tax may be significant last quarter. Next month, April, I do huge exports. Where is the refund? Delhi High Court, in the case of Pitamara books, held that restriction pertaining to spread of refund claim across different financial years is arbitrary, and there is no rationale behind the same, and stayed the operation of para 8 of the circular. Circular number 135 said, restriction is removed. You can file single refund application covering tax periods of 2 different financial years. E-relief. The only thing is, portal did not allow it. Till yesterday or day before yesterday. GST portal was only now, very recently, has started allowing application. Other whatever the law says, portal has got a different language. Portal might say something else, and portal may not permit at all. Therefore, you have to live with the scenario where you have to see whether the law has been actually implemented by the portal. Then only you get the relief. Requirement of additional documents and restriction of refund to the extent of invoices reflected in GSTR 2. I still remember July 17 when GST was launched, like 2007, and a little before that also. Many conferences were held across the country. Probably I was the only speaker who didn't speak so much on this, and I had my skepticism before it. supposed to politely say this is what the law says, but I am a doubt with it. But every other speaker seemed to say that நீங்க GSTR 1 தட்டி விட்டீங்கன்னா, you file the GSTR 1, it will magically appear as GSTR 2A in the other fellows, and he will have to quickly check it, and then he will upload the GSTR 2A. Tagal, it will get mirrored as GSTR 1A in the other man's return. Everybody will live happily ever after, like Grimm's fairy tales. So everything is smooth and hunky dory. I had my doubts about this system from day one, saying that it is not possible. We will have challenges. We will have technology issues. It is not possible to have so many returns. Then, of course, powers that we kept on saying that people are saying it is 3 returns, it's actually 1 return only. It is 1 return only. Why then withdraw the returns? Ultimately, we realized that it is not. It is impossible to go ahead with this system, and therefore they abandoned GSTR 2, abandoned GSTR 3. Then one 3B came. Then lot of amendments to justify 3B. Fine, something is there. But the act was designed in a scenario where all these were in place. Act made the assumption that everything will be in place. The act and the rules were a massive piece of legislation created based on the premise that the technology platform will support and implement what is there in the act and rules. If technology does not implement it and you're forced to withdraw GSTR 2, you're forced to withdraw GSTR 3 from the system and substitute an artificial GSTR 3B, can you still insist on GSTR 2A? So you can harp on GSTR 2A, you can harp on matching, you can do all those things if the entire system had worked. Having abandoned GSTR 2, which is a very critical document, which matches the purchases, you can still go back to the section and say, no, we will read all these things together. Therefore, the circular says how to proceed with the refund, additional documents, documentation such as self-certified copies of invoices, GSTR 2A. Circular number 125 also states that the availment of ITC shall be subject to restriction imposed under 36(4). Refund of ITC shall be restricted to the invoices reflected in GSTR 2A. HSN SAC should also be paid to the taxpayers since it is not there in GSTR 2A. Why it is not there in GSTR 2A? Because it is not required to be filed as far as the supplier is concerned. Therefore, one circular cannot say all these things. Two, you cannot deny the input tax credit based on the 2A story, because 2A itself was kept in GSTR 2 itself kept in abeyance, 3 it's kept in abeyance. Therefore, 2A is very artificial. It's only an internal document. There is also a circular saying that it is only an internal information. Plus, the control mechanism, I'm not saying it's not an effective, it's an effective control mechanism. That doesn't mean it will be used as a tool to deny refund. Subject to restriction under 36(4). What is this 36? You are supposed to compare GSTR 3B and 2A. You are not even required under law to compare 3B and 2A. So the rule says we will look at what is there in 2A. You are allowed to take input tax credit even in respect of items which are not there in 2A, subject to an overall limit of 20%. This is what the rule says. Then GST Council met again and decided that the 20 will become 10. To my knowledge, correct me if I'm wrong, I have not seen the amendment bringing down from 20 to 10. Release GST Council. The section 50 martha. You all know the issue in section 50. What is the issue in section 50? I have 100 rupees GST liability. I have input tax credit of 80 rupees. 20 rupees cash illa engita katradhu. I don't have 20 rupees to pay. Therefore, I have not filed the return. Delayed. Next month, I have 15 rupees cash liability. That also delayed. So I'm delaying 2-3 months because I don't have the cash to pay the 20 rupees, 15 rupees component. Finally, I filed the return in the 5th month. Notice comes saying that, have you paid interest? Sir, I have paid interest on the 20 rupees and the 15 rupees. No. Have you paid interest on the 80 rupees and 85 rupees? Sir, the ITC ache. You have to pay interest on the ITC. All kinds of recovery action, bank attachment, no show cause notices, all kinds of action, forcing everybody to rush to high. See, you know me, all of you know me very well. This is my 3rd decade of practice. I don't recommend simply going to high court unless you have a case. And not everybody can afford high court. 2 lakh liability, for him it's big amount. For another fellow, 2 crore liability, he may be able to go to high court. 50 lakhs, he may be able to go to high court. 30 lakhs, he may be able to go to high court. But the same, the 2 lakhs is also big for some person. Everybody should not be put in a position where the relief only comes from high court. If that is the situation we are driving business in, then we are also burning the high courts. We are seeing a docket explosion in high court only because of this. The law should have taken care of this. The law should have understood the practical problem. The law refused to do so, or the interpretation refused to do so. In my view, the proviso to section 50 itself is not required. What is input tax credit? Let us say, for example, since I know all of you by name, I am a buyer. Sendil is my supplier. He has supplied, pays the invoice, charged GST, filed a return, paid GST to government. Means what? Government has already collected the GST on the raw material component. I have only taken input tax credit of that. There is the revenue laws or tax laws for the government to insist that I should pay IGS interest on the ITC portion. Interest is only because there is a revenue loss. There is a revenue loss when the supplier has paid the tax. Supreme Court in Asia Motors very clearly held that tax credit is nothing but tax paid. Tax paid on inputs is nothing but tax credit. Therefore, it is somebody who has paid in advance. He has already paid the GST. I have taken the ITC. You can't ask interest on the ITC. So GST Council also agreed. Yes, there is a problem. We'll have to change the law. So they put they recommended the proviso. Amendment Act 2018 brought the proviso. Unfortunately, it was never notified. Number of sections came into force from 1 to 2019. This was missed out. This was not notified. And now a notification has come. I think this amendment will come into force from 1st September 2000. Despite the press release in the 31st GST Council, which said that the amendment will be retrospective, but with due respect, and the board has also given a press release saying that there are some technical difficulties which they are facing. That is why they have not given the retrospective date, they given the prospective date. Probably they think that the notification cannot be effective from a retrospective date, and probably they have an ordinance in mind to ensure that the notification goes back to 1/7/2017. Maybe. But as far as Tamil Nadu is concerned, as far as Madras is concerned, the decision is already in favor of the assessee in the case of Reflex Industries, where the Madras High Court has very, very clearly held that there cannot be an interest on the input tax credit portion. Why? Because of the fact that it is clearly not intended to levy input interest. The amendment shall have a retrospective effect. And therefore, based on various principles, the learned single judge has said that interest cannot apply on the input tax credit portion. Subsequent to that judgment, fresh set of writ petitions have been filed. They've all been patched together. They're coming up for hearing the first week of September. Meantime, this development has also happened. So why I'm saying all this? When 50 was sought to be amended and the council decided on the proviso and the proviso came to the statute books, the effective date did not happen until then. What kind of recovery and havoc that has happened in this country? Same problem is there when announcements are made and amendments are not carried out. So 20 to 10%. Correct me if I'm wrong. If it is not there, whatever is logic will apply here. Now forget that. Let me look at it purely from a legal angle. Can there be a rule which says 20% of your input tax credit which you have claimed, I won't give you? For you to say that, you must have power. Power is there. The power comes from section 43 capital A. 43A is yet to be notified. What is 43A? You will supply to me, you will upload the invoice, I will buy from you, I will receive the goods, I will look at the invoice, I will accept the invoice. Once I accept the invoice, I take input tax credit. If something goes wrong, both of us are jointly and severally liable. That is what 43A is. 43A has not been notified. 43A also confers the power on the central government to specify a certain percentage, deemed percentage, which can be knocked off. That provision has not come into force. Therefore, without the section coming into force, 36(4) has no source of power. There is no power to restrict credit which is validly available under section 16(2). Only restrictions are there in section 17, and you have not specified this under section 17. And therefore, writs have been filed in Karnataka High Court questioning the validity of Rule 36. Coming to other issues. LUT filed, but belatedly. Supposed to file LUT, I filed late. What is wrong? Nothing wrong. It's after all a procedural requirement. Benefits can be given even post facto. Substantive benefits of zero rating cannot be denied for technical delays. Madras High Court in the case of Ford India said that incentive-oriented benefit schemes which are intended to boost exports, when the substantive fact of export is not in doubt, liberal interpretation has been accorded in case of technical lapses. Otherwise, the very purport of the section can defeat it. Therefore, technical lapses cannot stand in the way of a substantive benefit of related funds. So, LUT not given in time should not be a problem. You should be able to fight that matter. In this case, somebody had applied for refund. There was inordinate delay in processing the application and giving the refund. The assessee approached the court. Court said, do one thing. Whatever is the total amount of refund that is due, pay to him. And because of all these factors, you have delayed so much, you pay interest at 9%. Review application was filed saying, under GST law, interest is only 6% and not 9%, 56. Court said that we know all that. We deliberately said that it should be 9% because of the inordinate delay through which you have choked that exporter, and therefore it is on the direction of the court you are paying 9% and not by section 56. Please pay, no review. I saw some questions relating to drawback. Here, what happened was there was a technical error in filing the shipping bill. He had selected the option of export without payment of tax instead of export on payment of tax. Now, export without a payment of tax means LUT. He did not have LUT at the relevant point of time. But he had thought he had in the other category, and therefore he claimed higher rate of drawback under the Customs Act. He had paid the IGST on exports, and then he sought refund. But the department said, no, we cannot give you refund because in the shipping bill, IGST amount paid was shown as nil. Gujarat said, real prince Pentex. Petitioner had exported on payment of IGST. Supply of is a zero rated supply and eligible for refund. You cannot deny the refund. Direction to sanction the refund with 7% interest. And there is an excess drawback claimed instead of the actual drawback, reduce that portion and give it to him. Don't deny the refund for him. So there was some question saying I claim more. You have claimed more, whatever you're entitled to, X plus Y is what you have claimed. X is what you're eligible. Y you're not eligible. Reduce that Y from the refund and ask for the refund. This most of you are familiar because this pertains to your own territory, your own clients. There was this notification amendment in the context of fabric. So there was a specific provision which said that whatever unutilized input tax credit after payment of tax up to July 2018 shall lapse. Gujarat High Court held that manufacturer acquires indefeasible right to utilize credit for payment of duty on final products. Such rights cannot be taken away in respect of goods manufactured prior to 31st July 2018. 54.3 does not empower framing rules for lapse of credit. Notification quashed. So this Gujarat High Court judgment is relevant across the country given the fact that notification has been quashed. Despite that, if some action is being taken in other zones and other jurisdictions, we have no other choice but to approach the High Court, challenge the notification the way it has been challenged before the Gujarat High Court. Today, there was a decision which got circulated in social media in the context of SESTAT, where the SESTAT has said education cess, secondary education cess, which was availed as a credit and could not be transitioned into GST, be given back as the refund. That you can get back your education cess and secondary education cess which you have availed because it's a vested right, you cannot take away a vested right. I'm sure most of you, as practicing chartered accountants, would know the GST story as far as litigation is concerned. Show cause is issued under Section 73 or 74. Or a notice is issued saying these are the errors in your refund application. Or I'm not going to give you a refund because I don't think these are input tax credits. Or I think this falls under Section 17.5, therefore I will not give you credit. Some reason or other, you will get a notice questioning your input tax credit in a refund application, or you may get a show cause notice on some other tax liability. You file a reply. Adjudication goes on. Assistant Commissioner, Deputy Commissioner. Matter is heard. Orders are passed. Under GST law, you have a right of appeal. First appeal is provided. Deposit 10%. What happens after Commissioner appeals decides, after Assistant Commissioner appeals decides? Next appeal is to tribunal. If it's an export case, if it's a refund case, if it's a ITC credit case, you're supposed to go to the state area bench of the tribunal, which has not yet been constituted. If it's a place of supply, you have to go to the national bench, which has also not been constituted. And you cannot constitute also because Madras High Court has struck down the section by saying that you are having more majority of technical members instead of judicial members, and therefore tribunal provisions are not valid. In this background, somebody had made an appeal, paid a pre-deposit of 10%, and also an exporter. Therefore, he claimed refund of unutilized credit. The department said that you've gone into dispute for some other matter, you paid only 10%. 90% is due. We'll adjust that money from the refund. Madras High Court said once the 10% pre-deposit is paid, the balance is automatically stayed, and therefore adjustment of refund against that demand is not illegal. So far, we have seen export-related provisions, exported-related rules, amendments that came in March which are hindering the exporters, and what is the legal remedies available. Now we come to an area where remedy is only through representation. Remedy is only based on tweets that are regularly made and somebody notices it. These are practical issues which every exporter is. If you are a human being, errors are inevitable. how much ever perfect you are in your systems, in your mechanisms, in your methodology, in your calculation, in your applications, errors can happen. Once a refund application is filed under a particular category, the GST portal does not allow the registered person to file another refund application for the same period under the same category. In case taxpayers inadvertently file an erroneous application, they cannot delete, rectify, and revise the application. This was the pushing for a long period of time till October 2019, one circular came. But the circular is very limited. It says that yes, you can rectify, provided registered payer has filed a nil refund claim in that category for them. What is the purpose? Whatever tax I want to claim, registered payer has not filed any refund claims under that category for any subsidy. So very few categories you can rectify. I think the power of rectification must be there. You must be permitted to file your revised application so long as it is within the same time frame. That is a condition that can be imposed. Why deny on technical grounds? Have a 2-year time limit for refund application under section 54. Maintain the time limit for a revised application also. Don't use the window to extend by one more year. Sir, I mean, this is cash, significant cash for exports, for exporters. It must be granted. Suddenly, portal restricts the maximum amount of ITC refund available in the electronic ledger or credit without any legal authorization. Sometimes, you're not able to get into your account, either your social media account or your bank account or even your system, because you've forgotten the password or your user ID is wrong. It's my mistake. Forgotten the password, I forgotten the user ID, and therefore I'm not given. How can a third party deny access? In fact, I want to explore this topic a little more from a constitutional perspective. If at the back end my portal account can be switched off, if at the back end my input tax credit can be blocked, if at the back end my refund eligibility can be curtailed, then my freedom to do business is also getting affected. I can understand if I violated the law, you have issued a show cause notice, I filed a reply. Despite the reply, proceedings are finalized into an adjudication order confirming that there is a violation of law. The appeal also confirms it. Therefore, there is a mechanism by which the person is identified as a defaulter and therefore action is taken. But without due process of law, just because there is a suspicion, 100 exporters are there, 10 fellows commit fraud, 90 fellows suffer. Suspicious exporters, some name is given. Some of them are, I'm not saying, I'm not batting for all those fellows who are by inherent frauds or who have defrauded the system and defrauded the government of valuable revenue and the citizens of a valuable enjoyment of the government's expenditure of that revenue. I'm talking about those who have made some technical violations. For example, what happens if you are in the list? You are supposed to be investigated and you're supposed to check out whether you are in existence, your operations are fine, and whether your GSTR 2A and 3B match. Why does GSTR 2A and 3B should comes into the picture? That itself is a separate ocean by itself. That depends on my supplier filing the return, which I have no control. How does it make my export a suspicious transaction? An export is a suspicious transaction when goods are not exported, goods are unnecessarily overvalued, it is not a genuine transaction, misclassification. These are all things which you can look at. But on your input side, you have not availed credit properly. There is a mismatch between your procurements and your GSTR 3B. Those do not make the export suspicious. Therefore, it is important to understand that when we change the law so much, we must also build in safeguards to protect the good exporters, the genuine players. Many refunds have been struck and regular deficiency memos and show cause are issued taxpayers for clarifications. Due to mismatch between export values in GSTR 1 and GSTR 3B, they are not transmitted to ICE Gate portal, and therefore you have a practical. Incorrect filing of shipping bills creates nightmares. Non-updation of courier shipping bill at customs system creates even more a problem. So these are all, people might say, sir, these are all teething issues. We can iron them out. Sir. How long will you have teething issues? July 17, GST was born. We are now in August 2020, 3 years over. You cannot simply say these are teething issues. And especially any issue with exporter must be given utmost attention and sorted out. On one side, we have a dream of $5 trillion economy. If you want to achieve that, exports plays a big role. I still believe that goal is achievable, provided we completely change the way we look at business. So this is my last point for the day. I am of the firm belief that we should have such a big target. Beautiful dream of our Prime Minister that we should achieve $5 trillion economy. Objective of that was to incentivize, and everybody should embrace and say this country's goal is my goal. I will also grow. I will also have aspiration to grow. If I grow, country grows. That alone is not enough. The trust deficit that is there between business and the statute or statutory authorities or the bureaucracy should get bridged. 89.4C, 96B, Rule 36.4, proviso in the context of interest not getting notified, bank attachment without notices. These are all only instances of trust deficit. In a system which has got so many people, there will be some bad eggs. Focus on the bad eggs. Do not change the law for the good eggs to hope that this won't happen. Today, we have phenomenal data. The GST portal collects so much of information, so many other documents are filed, so data analytics are available. It is not as if those days where people would not have any intelligence. There is the data that is coming in the form of intelligence. Now, enough information is available. There is a digital trail of the entire transaction. This is the time to ensure that reforms are made at a very large scale in the export sector. So, what are the reforms? Number one, we have to get rid of this scrutiny and suspicion based environment because some frauds have taken. Second, there cannot be a blocking of refund or withholding of refund. That will squeeze that exporter's cash flow. If he's squeezed of that cash flow, then he is not able to meet the commitment for his buyer. He cannot sit the next consignment, or there'll be delay. If there is a delay, order is gone. See, please understand, India is competing with so many other countries who are going out of the way to help exporters. Go to Vietnam, go to Cambodia, go to Indonesia, Sri Lanka, Philippines. Every country is now grabbing that export market. How do we remain competitive? Yes, we have great past glory. We are best exporters. Our quality is phenomenal. The buyers respect the Indian exporters. Today, it's a price war. Today, it's a situation where everybody is suffering because of COVID. Wherever it is easy, wherever it is friendly, wherever it is cheap, business will go. Therefore, government should take this fact into account, and instead of simply making more and more rules, they should look at a elimination of so many rules and procedures to make export active free and shackle free, so that the true potential of India's growth can be achieved through export. Third suggestion: why should I buy raw material and pay GST? Why should I buy service and pay GST? Take input tax credit, give a letter of undertaking, export my output, go through shipping bill matching, this matching, that matching, come back to you and ask for refund of the input tax credit paid. And then you say GSTR 2A should match. This fellow has not filed return. I cannot give you the return. solution. Can't we not amend the law to say an exporter can procure goods or services without payment of GST from a supplier? Amend the law. Supplier supplying goods or services to an exporter shall be zero rated, whereby the vendor who supplies you goods will not charge you GST. Vendor who supplies you services need not charge GST, but their input tax credit will not be affected because it will not be exempted. It is zero rate. Why should I buy, pay GST, take ITC, then ask for refund, and then complain about the refund procedure? Why not clean the system by allowing procurements without GST? If you have worries about things, at least major raw materials, at least you cover wherever you're sure that this can happen. Concept of a block credit should not exist in GST regime. All of you are familiar with Section 17.5. So many credits you cannot take. Why? We have brought GST only as a reform. In fact, if you read, you are aware of the Constitutional Amendment Bill, the 101st Constitutional Amendment Act 2016 paved the way for GST. Before the act, it was a bill. That was the Constitution 122nd Amendment Bill 2014. Please read the preamble to the bill, statement of object to the bill. The object of the bill is to eliminate cascading effect of taxes. Object of GST itself is to eliminate cascading effect of taxes. The object of the reform legislation in the Constitution statement of objects is to eliminate cascading effect of taxes. What is the justification of 17.5? How can there be a 17.5 which says that no, we can't give you credit on immovable property, we cannot give you credit on construction, we cannot give you credit on rent a car, we cannot give you credit on this, that? Why have block credits? Why not? For example, you're an exporter. You're putting up a huge factory. There will be construction costs. There will be cement, steel, contractor. 17.5 would say that whatever you use for construction of a building will not qualify for credit. Huge amount. Why cannot get credit for that? After all, using the factory only, I'm producing goods. On the goods I produce, I pay GST or I export it. Why can't I get credit for that? What is wrong in that claiming credit? That is why Orissa High Court said you can get safari retreats. Those matters pending. But I'm looking at the larger picture. I'm looking at whether the legislature can look at it differently and say, why should we have these arcane provisions and provisions which say that ABC no credit, DAF no credit. You want revenue this side, you want GST this side, you pay GST this side, credit. You don't pay GST because it is exempted, no credit. No. There cannot be any difference. Because of COVID, receipt of foreign exchange is going to be very, very difficult. Therefore, this amendment linked with receipt of foreign exchange for goods will have to be removed, and further relaxation has to be provided on account of COVID and buyer defaults, because the buyer defaults are on the rise, and therefore the exporters needs to be insulated. So the last 1.5 hours, I've taken through the entire journey of exports from a statutory perspective, from a rule perspective, from a case law perspective, from a practical perspective. Finally, I've given certain suggestions as to what can be the future. All of you are very active professionals in the city, which is famous for exports. We're well connected with many of the biggest of exporters in the country. We're also part of the associations which are active in exports, support the exporters. So I would request you to look at some of the suggestions I've given and probably convince the government to your good offices to ensure that we change the way exporters are looked at. We change the way export law is looked at. We change the way GST is administered as far as export is concerned. And through exports, try to achieve our goal of $5 trillion. Thank you very much for a patient hearing. And now open up the chat box. Open up the windows. If there are any questions which I can answer straight away, I will answer. If it is not possible to answer, I'll park the question and take it up.
Thank you very much, sir, for having joined with us, explaining all the legal litigations and almost remedies for all our issues. Yes, sir. எங்களோட issues.
Thank you.
Thank you. Thank you. Sir, members, we can ask questions to the speakers. எங்களோட இஷ்யூஸ்க்கு எல்லாமே லீகல் ரெமிடிஸ் இருக்குது அப்படின்ற மாதிரி நீங்க சொல்லியிருக்கீங்க. ரொம்ப தேங்க்ஸ் சார். பர்டிகுலர்லி தட் 36(4) அது வந்து that will be very useful to us that it has no legal sanction. 36(4) has no legal sanction.
Our form only has filed in Karnataka.
Yes, sir. Yes, sir. சார் ஒரே ஒரு டவுட், எப்படி இந்த மாதிரி ஒரு லீகல் பேசிஸ் இல்லாம நிறைய எனாக்ட் பண்றாங்க சார்? தே வுட் ஹேவ் கன்சல்டட் சம் எக்ஸ்பீரியன்ஸ்டு.
இல்ல, see, I'll tell you practically what's happening is that the somewhere the rules have taken a march over the section. Everywhere they believe that rules can be used to do something, and a notification can be used to something, or elected circular can be used to do something. Ellame subordinate legislation le people are talking, and if you see the number of judgments from Kolkata Court, you have seen in many cases the courts have been very strict and struck down itself. The very fact that courts are striking down certain rules shows that there is something seriously wrong in the approach. It is quite unfortunate that these rules come.
Even the yesterday's notification, sir, and the yesterday's notification with effect from 1st September, I think it was felt that press release were given in February itself, that it will be given retrospective. But இவ்வளோ லேமெண்ட் மாதிரி ஒரு நோட்டிஃபிகேஷனை இன்னோசன்ட் மாதிரி கொடுக்குறாங்களே அப்படின்றது தான் வந்து ரொம்ப இதுவாக இருக்கு. We are also educating our trade bodies to take these issues to the courts, sir. Even first ministry refer பண்ணதா சொல்றோம். Some our heads of our trade bodies are also having influence with the finance ministry and other government organizations, sir. But they are not getting relief for this from the government. The final way for them is to file writ petitions. We are also encouraging them to go for appeal on all the these disputed items.
It is unfortunate. நீங்க சொல்றது கரெக்ட் தான். What should have been sorted out through discussions and what should have been a patient hearing and solving the problem at the government level or council level is now coming to courts. Courts க்கு வரது காரணமே because you're not able to get relief at the right place at the government. Government is also in a tight way. Everything they say has to go to council. Every person cannot be taken to the council. And now council is going to be busy for the next few meetings for compensation. We issue council.
The chat box le da queries irukku. Sir, the bonded manufacturer system. Sir, the bonded manufacturer system one.
See, it is nothing new. It is come in a different format. It was already there where the entire facility of manufacturing location could be identified as a bonded location. And you would be given certain concessions in terms of imports, etc. And you can manufacture and straight away from there export the goods. So this is like this is like outsourced manufacturing functions abroad. Those kind of things can. It is a good model, but it is not something new. It was already there. Format konjam simpler போயிருக்கு.
Only for imported items மட்டுமா sir, raw materials?
See, SEZ இருந்தா you are better position. For an SEZ location, you are able to procure even local goods without GST. That's better. But as I said, my suggestion for exporters would be to change the law, whereby they should be able to procure even for export again, if they're able to procure without payment of GST. It will be much better than your feeling. Because it might require a major reform. Still, it is better.
Sir, one more thing, sir.
சொல்லுங்க.
RCM on services, எப்போ சார்? Import of services. RCM on import of services.
Okay. ரெண்டு விஷயம். ஒன்னு, RCM on, first of all, every company which has got a business in India and exporting, etc., might have some foreign exchange outflow. It will be for royalty, it may be for technical fees, it may be for marketing support, it may be for brand building, it may be for advisory, or it will be for import of goods. So when there is a service which is procured from outside India, it is identified as an import of service, and the transaction ரொம்ப clear. There is only one foreign supplier, you are the recipient, ரெண்டு பேரு. Since you are the recipient of service, the law says that you pay GST under reverse charge mechanism of service. This is quite common abroad also. Every other country also has got reverse charge mechanism. When it comes to ocean freight, it becomes a problem because ரெண்டு பேர் கிடையாது, மூணு பேர். அதுல சர்வீஸ் ப்ரொவைடர், சர்வீஸ் ரிசீவர் வேற யாரும். இம்போர்ட்டருக்கு சம்பந்தம் இல்லை. கச்சேரியில if there is somebody singing and somebody is playing the மிருதங்கம், அவங்க ரெண்டு பேருக்கு தான் பிரச்சனை வந்ததுன்னா, how can you ask me? அவங்க ரெண்டு பேரும் சரியா வாசிக்காட்டி நான் காது கேட்கல, I don't like it, but you can't penalize me.
Sir, one more doubt.
Yes, sir.
Actually, for regarding that 1.5 times the restriction is there now
Yes,
for claim. Some offices are imposing to get a certificate from the chartered accountants. How far it is tenable, sir? At this juncture, actually, I request. Actually, I found some of our members also have given certificates. I saw the certificate. So at this juncture, I request all the members to take a uniform stand, not to give such certificates. Of course, what is your view, sir?
Please do not issue such certificates because ஒன்னு domestic sales for the relevant tax period கேட்கறான். அந்த tax period domestic sales கண்டுபிடிக்கிறது கஷ்டம், or some other similar supplier located like that சொல்லி கேட்கறாங்க. So going to be extremely difficult to get that kind of certification, and what is not required under law, don't start giving. Law does not say that you must get a certificate from a CA saying what is a domestic transaction, what is a domestic supply. But all exporter is in a position to identify that, for it is up to him to identify. But you start giving certificates without doing audit, and subsequently, similar goods are questioned. There can be other problems, so it is advisable not to issue. But parallelly, as I said, the artificially capping the export value itself is illegal. அதுவும் கோவிட் என்னால டைஜஸ்ட் பண்ண முடியாது. என்னன்னா 23ஆம் தேதி வந்தது.
Actually, they advise the exporters to get the quotations from some other local suppliers for the same products. Then, based on that local quotations, they ask the chartered accountants to give such certificates. So, I also find certain CS given such certificates. But anyway, again and again, I'm requesting all of the members not to give such certificates. You have to take a uniform stand. Then only some remedy will be given by the people.
I agree with you. சந்துரு ஏதோ அடிச்சுட்டே இருக்காரு, என்ன அடிச்சுட்டு சந்துரு கேளுங்க.
ஆமாங்க சார். அப்புறம் கமிஷன் ரிசீவ்ட் இன் ஃபாரின் கரன்சி, எனி ரெமெடி அவைலபிள் சார்? டாக்ஸ் ரேட் இஸ் ஹை, கமிஷன் ரிசீவ்ட் இன் ஃபாரின் கரன்சி.
Sir, I am very you bring a good case, we'll test it out. The point is like this.
Yes, sir.
I am receiving convertible foreign exchange because of the provision which says intermediary is located in India. It is getting taxed, but the fact is that GST is a consumption-based tax, and the service has been consumed outside India. GST is a consumption-based tax, is well established. So, if I provide consultancy to a foreign party, it is export. If I provide intermediary services, it is not export. Then it has to be questioned under Article 14. Unfortunately, the writ that was filed in Gujarat High Court did not touch any of those things. Larger question they should have asked is, how do you get a right to tax this? இதை எக்ஸ்போர்ட் இல்ல பிளேஸ் ஆஃப் சப்ளை இந்தியான்னு சொல்லி how can you get a right to tax it when the service has flown from India and landed abroad? So the requirement of export is that Supreme Court, நான் சொல்லல, 5-member judgment of the Supreme Court in the sales tax case law says that when something emanates from one country and lands in another country, it is export. So the right way to go about it is levy of GST on an export. You violate two of the constitutional mandate which only allows customs law to levy export duty. Export duty போடுற power only customs has. That too, if the customs tariff provides for it. Only there are few items which attract export duty. So any attempt to impose tax on exports will only have the character of export duty, and therefore it is not permissible under GST.
One more thing, sir. Legal validity of classification of risky exporters. அதை பத்தி
I did touch upon it. Suspiciousness சொன்னேன், but see, risk exporters, it is not as if there is some fire, there is some smoke, there is some fire. இல்லைன்னு சொல்ல முடியாது. So government has identified some fellows or some people who have done some frauds.
Yes, sir.
So they then overall give a blanket list and say that verify all these things. So the verification list பார்த்தீங்கன்னா, what are the items to be checked to see whether this fellow is a genuine exporter or not? Some of the questions cannot be answered by even a non-exporter. Some of an exam you will fail one, because one of the questions is whether GSTR 3B and GSTR 2A matches. So the questions must be focused on the fraud that was committed. For example, you are talking about you are being an exporter of 100 crore. You don't even have a plant. You don't even have a facility. You don't even have a registration which is proper, or you don't have employees. You don't have subcontractors. You don't have payments justifying that. Remember, there are criteria which you can expose, where effective forensic methodologies can be used to find out. Data analytics can be used to find out. They can filter this bad list, and they can come to an actual bad list and take action against that, instead of saying இவங்கெல்லாம் ஒரு டவுட் இருக்கு, you examine. What happens is that in the you examine list, a lot of good people also.
Yeah, definitely. A lot of people stuck in that. Sir, whether higher interest can be claimed when refund is delayed due to
that was fluke. அது ரொம்ப rare to get 9%.
Only 6%. 6% will be eligible, sir.
Yes.
Yes, sir. Sir, one more thing, sir. One AO issued a notice that the assessee claimed IGST refund for the month of January and February, but the AO issued a notice that you are not eligible for refund during March 2020 since you have claimed IGST refund in January and February. January and February IGST refund claim பண்ணதுனால மார்ச்ல வந்து இருக்கிற எக்ஸ்போர்ட்டுக்கு refund இல்ல அப்படின்ற மாதிரி ஒரு
we discussed that, no, whether practically பார்க்க மாட்டேங்கறாங்க. That is every month for export and right to see must tally இந்த மாதிரி பார்க்கறாங்க, but that won't happen. The running business. Yes, now they've started accepting that. Initially they were not accepting that. They've started accepting that. Yes, sir. That then they started pushing financial to financial. Now that also has changed. That also they have started.
Members, any other questions, members? Or we can send our questions, any other questions, or not only now, in future also, we can send and consult our beloved Vaitheeswaran sir. This regard, we can send our queries to his email ID also. Or
in fact, I'm missing an opportunity to come to Tripur and meet all of you, because I know everyone personally.
Planned, March le plan பண்ணிருந்தோம் sir. Before lockdown, even without knowing all these things, we planned for a good session in March itself, sir. Yes, sir.
In many cases, I know the father CA as well as the son CA.
நிறைய பேர் உங்களோட பிரசன்ஸ்க்காக வெயிட் பண்ணிட்டு இருக்காங்க.
Thank you. Next, once COVID tell us, definitely will come, sir.
Yeah, please.